Hi, this is Jeffrey Cohen, Chicago Quantum. It's 7:56 in the morning. If you have any questions, go ahead and ask me anything. If you want to go over to Twitter to Chicago Quantum, Chicago_Quantum, you can also ask us anything. We'll keep our eye out on the chat and let us know. And so, where are we today? Today, everything's green. Everything looks great. The S&P 500, the Spider is trading at 405 and change. The IWM is at 180 and change. QQQ is at 303 and change. Green, green, green. So let's take a look at the futures. That is so green, I might have to put my sunglasses on. So what we're seeing here is we're seeing the VIX is down, so fear is down. I mean, energy is up like crazy. It's crazy. So you see the Nikkei was up, Europe's up, US is up, gold's up, silver's up, copper's up. The US dollar's down. I don't know that I actually believe that, but that's interesting because the euro is at 105.50. So that actually means that the dollar's down because the euro is up. And food, now what's interesting though, you have copper's up. Food inflation is high today. And so, I mean, this we worry about this from a recessionary perspective. We took a look at the retail sales. Retail sales came out this morning. Month on month, retail sales were up 1%. That's great. And it was a revision for March. March was up. So retail sales look good. They weren't great. They were up 1%. It's not like, everyone went to the stores and started buying. But not bad. We'll take it. Right? What's interesting was we had some stocks really pop yesterday and really come down. We had meme type action yesterday. And so the speculators are out in force. I think this is interesting. And my guesses are going to be out again today. Loving it. Right? Yesterday, we talk a lot about market breadth. So just to remind you, although the futures are up this morning, crypto is pretty flat, right? So I wouldn't get too excited. It's not like everything's popping up. We already looked at how red the stock futures are. From a news perspective, I didn't see good news, and in fact, China, if you go to CNN.com, they have a China page. And I wanted to show it to you because I think it's important. All right, Chinese markets are close to the bottom, but these articles are very negative. And I don't know that the economy is going to be popping anytime soon. They're talking about horrors with COVID, political challenges, political tightening. So what I would say is China's not going to rescue us. That doesn't say it's going to drive into recession or anything. It just says not going to rescue us, okay? And I don't see a lot of great news. Now, Powell's going to talk today. Great, but not a lot of news. This is just market looks strong, right? Bitcoin's up 0.6. The indices are up almost 2%, between 1 and 2% today. So what I also saw was that oil is about 115. So oil's very high. Gold's up, silver's up. The dollar's down. So when the dollar's hitting 105.5 euros, that's a pretty good level for stock investors. The VIX. Jeff, what do you care about the VIX? The VIX is a risk or fear gauge on the markets. If you look over the last month, when you hit about April 25th, the VIX went over 30. So from April 25th, there was one day, pretty much all the way to May 12th, and then it finally started coming down. So you had 3 weeks of true market fear. It looks like now we've put that behind us. Here's what I'm going to say to you. So I run a lot of models, talk to a lot of people. I wouldn't start celebrating and taking a mortgage on my house and pumping it in the market. But it sure looks like Friday is options expiration day, and people are starting to de-risk, de-lever, take it easy. Right? They're starting to maybe take some money off the table, some chips off the table. So take a look at this while we're watching. QQQ's up a point. Spider's up a point. IWM, which is the Russell 2000, is about the same. What else is worth looking at? Let's look at let's look at bonds. You know I love bonds. Yesterday, all issues. Advancers decline line doesn't look bad. In fact, Advancers, it's 5 to 3.5. That's not bad. Investment grade was like 1.7 to 1 went up. Now, unfortunately, highs to lows, like what's in the toilet in terms of bonds or fixed income? Corporate bonds, you still had about 25 to 1 new lows to new highs. Same thing with high yield, same thing with convertibles. Dramatically more new lows than new highs. But I just think it's interesting that on high yield, it was 1 to 1. Meaning, for every corporate bond that's high yield that went up, one went down. It was good news and bad news. That was balanced. Same with the convertibles. Those are the ones with a stock or equity taste or exposure. So, good day for fixed income. If we take a look at it for the treasuries, how'd the treasuries do? Well, this is interesting. So, short-term money has a lower yield. So we're not hiding, right? 30-year money 3.09, 10-year money at 2.88. So we're under 3% at 10-year money and 5-year money, and 30-year is really balanced out. In fact, if you look at the yield curve, it's a nice gradual slope up. It's a healthy bond market, and so it's a nice market today. So if we remind ourselves of where we ended yesterday, this is from my website. So this was the market close. What did we see? Money managers are mostly down. So because the stock market was down yesterday, money managers were down. Retail, specialty retail was mostly down. Crypto was down. Physical miners were up. So maybe people weren't so worried about the economy. For cannabis, if a stock went up, it went up a lot. Chips and semiconductors were full red down. Trucking and transport was mostly down. Personal computers are mostly down. Your stonks, right? Your high risk, maybe lost a lot of money. They were mixed, but there were some big moves, and quantum computing was down. So the question's going to be, Jeffrey, where are we today? So today, the futures are looking solid. They're looking very green. But let's take a look at certain market sectors. We don't need to look at my stocks. That's not that interesting, right? Let's go back. Let's look at the money managers. Let's run through the industries real quick. Pre-market. Wow. Money managers are up in force this morning. That is very bullish for the market, right? Because it says money managers are paid based on how investments do. And so everyone must be thinking investments are looking good here. Now for retail, this is where it's interesting. Discount retailers dropped. Look at Walmart. Down 6% pre-market. Now first off, that doesn't happen. 6% pre-market. Walmart. Guys. Actually, what the heck's going on? Right? That's crazy talk. And then, you go on and on, right? So this tells me specialty retail, Alibaba, Shoe Carnival, Carvana, right? This is high risk stuff. Q-rate. So things are moving into risk. That worries me, of course. So let's take a look. Physical miners are up. Bitcoin's up. Bitcoin miners are up. All right, we're going to have a crazy day today. Let's just be honest. Strap on your rockets, baby, because this is a crazy day. Cannabis, you got 4 stocks down. You got a ton of stocks up. Cannabis, one of the highest risking parts of the market. Chips, who brought the dip? because we got the semiconductors and chips here. They're either all up or they're passive. I bet you today's the day for your Chicago Quantum net score long, because this market is on fire. Trucking, trucking and transport is up. We are across the board. Okay, finally, let's look at our stonks. Well, I'm not surprised when Imperial falls because of who's backing them. But, wow, so many stonks are up. Bird Global, NGL, Regis, Ding Dong, Party City, Tellurian. I mean, this is like the highest risk part of the market. Workhorse, Select Quote, Roblox, AMC is up, backed. So money is pouring into the high-risk sectors and, unfortunately, pouring out of Walmart. And so, all right, let's wrap up with a little technical stuff here. So we ran our models last night. Very interesting. The variance of the S&P is at 1.2 times 10 to the negative 4. And markets are still pretty universally down over the year. Spider's down 3%. Russell's down almost, or it's 19%. QQQ's down 8%. That's excluding dividends, which were roughly 1%. If you look at the overall run of the market, money losing stocks, 4.2 variance times 10 to the negative 4. So 1.1 to 4, almost 4 times. So your money losing stocks have a very high variance right now. When I compare that to the up run, you're going to see a vastly different number. By the way, we're adding some additional analytics to our model because we want to look for cash. We want to see how cash flow affected company performance and stock performance. But for right now, we're using profitability. Yeah, the variance of all your money-making stocks is 1.4 times 10 to the negative 4. So if you want to reduce your risk, you're still better off in the S&P 500, the Spider. But it's up at 1.4 to 4.2. So you're talking a full 3-to-1 increase in variance if you invest in money-losing company stocks versus money-making company stocks. So market opens in 20 minutes. What do? Well, if you're an investor, okay, if you're a 5-year investor, you're in it for the long haul, I'm going to bore you to tears with what you should do. Focus on your job. Don't day trade. Work hard in your job. If you don't have a job, get a job. Continue with schooling as much as you can. Keep learning. Do you know right now we're not putting new money in the market? All we do is study the market. So when we do put our money back in, we're ready to roll. Get and stay married. If you're already married, spend time with your spouse. If you're not married, find that love of your life and get married. Great way to make money, basically, and save money. And once you do that, save every dollar you can. Pay off debt, be frugal. Celebrate your savings. Celebrate it. Every time you save another $100 or $1,000, throw like a little party for yourself. Well, maybe a picnic. Don't spend money to have the party. Invest your money in passive U.S. and global stock funds, bond indices, and bond funds. So somebody just asked, it was Fallon, and I really appreciated it. So I was very specific, 70% in either SPY or QQQ, but not both, because a lot of those stocks are overlap stocks. Plus 30% in IWM, so that's your small caps. And then in terms of your bonds, I would say I would still go I mean, right now, where the market is, I would go 50% of total investments in bonds right now, because I think stocks are much riskier than bonds. And when you can, when you have more money to invest, when you're a little more savvy, diversify in other asset classes like real estate, metals, U.S. government savings bonds. By the way, most individual U.S. citizens can invest up to $5,000 a year in savings bonds, and they are a tremendous investment. They have tax advantages. If you sell your savings bonds and use the money to pay for qualified education expenses, you don't even pay tax on it. It's terrific. When you have a lot of money invested, then you can start to look at active money management and active investing. As you get older, put more, or as you're younger, put more money in stocks, less in bonds. As you're older, put more money in bonds, less. And only really sell your investments when you need the money to live. Don't try to time the market. Wow, Jeff, you just put me to sleep. So boring. All right, let's go back to the futures. So green. Futures are going up. It's going to be a hot time in the old town tonight. This is going to be a big day in the stock market, right? These are staying up. Dollar's down. VIX is down. What I don't like is that bond yields look like they're set to go up a lot today. And so you're going to have rising interest rates competing with rising equity prices. You had across the board pre-market action, hot action in the pre-market. Okay, look at that. Money managers are through the roof. So what this tells me is we are off to the races on Tuesday. Just remember, Friday options expiration. A lot of money is going to be coming off the table. This actually could be deleveraging of people that were betting against the market or betting that the market was going to go down. All right. Have a great day today. Good luck in the markets. Bye-bye.